I was once at a point where trading was stressful. After a loss, I would double or even triple my lot size to quickly return my losses. I traded with a small account or small capital, as small as $10, and on the same day I would blow it. It was during my college days, so every penny I could get would go straight into my trading account and bang. My parents usually sent me $20 per week, and the minute I received it, I would deposit it directly to my account. But if you truly love something, you pursue it till you make it. I never stopped, and this is what I can do now. The first thing that I can now do is to create what we call a watch list. Firstly, I go through a list of 15 to 20 pairs on my mobile phone 2 hours before the London session. In my case, I am active during the London and the New York session. On this scroll, I look for pairs following the market maker cycle, asking myself which part of the cycle they are in. I favor reversals that comes as peak reversal trades and in-trend trades. By in-trend trades, I imply those that are continuation patterns. Those pairs with potential setups will proceed to the watch list. So my watch list is basically a short list of pairs I am looking at on that particular day. The next thing after making a watch list is to create what we call anticipations. After making a watch list from my phone, I jump to the computer for full analysis. It's actually, if not impossible, to make full analysis on your mobile phone. So the mobile phone is just there to give me a guide of those pairs that are following the template of the market maker cycle. On this stage, I'll be counting levels from the higher time frames to fully confirm the bias obtained from my phone. On the computer, I mark the charts and use technical lines to create the anticipations. So basically, anticipations are predicting path lines where I would expect the market to follow. They just look like the following. In this case, we have gold against US dollar. So the first thing that I did was actually to put gold on my watch list. After putting gold on my watch list, the next thing was now to count levels. We had the first level, the second level, and I was now expecting to see the third level to be done. But before we do so, I wanted to see an M pattern being issued for us to complete this particular cycle. Therefore, an anticipation example is actually drawing this line, and this is my third step in my trading process. After making anticipations, I attain what is called the point of market interest. Where is the market going to move first before I make a move? This is a zone where the market should come for me to take action. My greatest rule in trading is the market must first make a move before I take action. Let the market tell you what to do next. It might tell you not to trade for that particular day, or it might come to your point of market interest to give you a potential entry point. When price comes to the point of interest, it's time to wait for entry triggers. Entry triggers includes candlestick reversal patterns or price action flow. So either of those two is what will lead me to press buy or sell. Then the last but not least is the risk management. I would need to anticipate where my stop loss is going to be issued and then calculate the lot size for that particular stop loss. We all know that pairs have different lot size, weights. Euro USD is different from USD ZAR, so I'll need to calculate my lot size so that if the trade goes against me, I have an equal and consistent loss to be made. So let's now go over the charts so that I can show you how these anticipations are made. In this particular case, the entry was going to be an in-trend trade. After making an anticipation like this for level 3, the market came to the point of market interest and then gave us a point of entry. After that, the market went right up. After going right up, we know that after 3 levels of rise, we expect to see the market to reverse, and this is what happened. So on the real charts, we are saying this was the point of market interest where we made our entry. Then after that, the market completed the cycle to give us a peak trade or a peak reversal trade. They actually retested the same point for several times, 1, 2, 3, 4, 5, 6 times on the same point before they actually made this particular drop. So this is the way I trade. That is the way I carry out my trading process for me to get high pristine entries. And of course, I do encounter losses within this process. On that note, we come to the end of this video. I'll see you on the next one.